We're jumping straight into Rocket Lab today. Everyone is watching the price action, but the real story is the race to launch the Neutron rocket and the massive defense contracts fueling their backlog.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us. And before we get into the nuts and bolts of all this, do yourself a favor. Hit that subscribe button and smash the like. If you want to stay ahead of these market moves, you're definitely going to want to be locked in with us.
Okay, so let's unpack this. If you've looked at your screen recently, you might have done a double take. The chart has gone, well, completely parabolic.
It's been a violent move, honestly.
We're talking all-time highs, hovering right in that $91, $96 range. It's up over 250% in the last year alone.
The kind of chart that gives value investors heartburn and makes momentum traders just drool.
Right. Now, sure, we saw a little shakeout. It dipped down to the $87 level, but the broader sentiment has clearly changed. It feels like the story for years was SpaceX wins, everyone else go home.
Mm-hmm.
And now all of a sudden, the market is screaming, wait, we actually have a credible alternative.
That's the perfect way to put it. For so long, the investment case for, the whole space sector was basically a search for a distant number two.
Right. Who gets the scraps?
Exactly. A winner-take-all game.
Mm.
But what we're seeing now is a structural shift. The market is pricing in a duopoly. They see Rocket Lab as a critical piece of infrastructure.
Mm.
But, and I do have to be the buzzkill here a little bit.
Please do. That's why you're here.
We have to be careful not to get blinded by all the green on the chart. When you see a vertical move like this, you have to ask, is the business really executing? Or is this just hype? Because gravity, it applies to stocks just as much as it does to rockets.
That leads us right into the bull case, because the numbers, well, they're getting harder and harder to ignore. And here's where it gets really interesting. I think most people still see Rocket Lab as a kind of taxi service.
Right. You pay your fare, they take your satellite to orbit.
Yeah, but that's the old model. If you're still thinking that way, you're missing like half the company.
And the more profitable half, honestly.
I was looking at the Q3 2025 numbers. Revenue hit $155 million, up 48% year over year, which is great. But the kicker, the space systems segment, that brought in over $114 million of that.
Which is huge, just huge.
Way more than the launch business. So let's break that down. They aren't just the taxi driver anymore.
They're building the passenger.
Yes.
And that's so vital to understand why the stock has this premium. Launching is sexy, right? It makes for amazing videos. Yeah. But it's a brutal, low-margin business.
Yeah.
Manufacturing.
Yeah.
That's where the stickiness is.
When you say stickiness, what do you mean by that?
I mean, you're integrated into the customer's entire supply chain. When Rocket Lab is building the solar panels, the reaction wheels, the star trackers, all the guts of the satellite, they're embedding themselves. They call it becoming a space prime.
Okay, hold on. You dropped a few terms there. Reaction wheels. What are we talking about?
Fair enough. Think of it like a high-tech gyroscope. In space, there's no air to push against to turn, so you spin a heavy wheel inside the satellite, and, conservation of angular momentum turns the whole satellite the other way.
Ah, I see. So without them, your expensive satellite is just tumbling through space.
Tumbling uncontrollably. And star trackers are just what they sound like. Little cameras that look at the stars to figure out exactly where they are. The GPS of space. Rocket Lab makes all of it.
So if I'm a customer, I don't just hire them for a ride. I hire them to design the mission, build the hardware, test it, and then fly it.
Precisely. And it means it's incredibly hard for that customer to switch to someone else later. Rocket Lab owns the architecture. It's kind of like the Apple of space. They own the hardware and the service, vertical integration. And that is what allowed them to land the big one. The catalyst everyone is talking about. The contract with the Space Development Agency, the SDA. This is the deal that changed everything. The one that made all the analysts update their models.
Let's put a number on it. $816 million.
It's a massive, massive validation for the company.
I mean, for context, that one deal basically doubles their backlog. Their total backlog is now $1.1 billion. And this isn't for some university science project.
No. This is for 18 missile tracking satellites. And to connect the dots, this is for the U.S. military. These are national security assets for tracking hypersonic threats. When the SDA hands you almost $1 billion, they're not just a supplier anymore. They are a prime contractor.
And we saw the War Secretary visiting their facilities. That wasn't just a photo op, was it?
No, that's a strategic signal. The Pentagon needs a diversified industrial base. They can't just rely on SpaceX for everything. That's a single point of failure. This contract confirms Rocket Lab has graduated.
Which creates a huge moat. You don't just, walk in off the street and start building classified missile trackers.
The barriers to entry are just enormous. You have to bend metal and prove it works in space.
And speaking of proving it, we can't ignore the rocket that's actually flying right now, Electron. It's a machine. They hit a record 21 launches in fiscal 2025.
With a 100% success rate.
100%.
And that reliability is what's priced in. In this industry, consistency is everything. But what really stands out to me financially is the margin expansion. GAAP gross margins hit 37% in Q3.
And the guidance for Q4 is even higher, right? Up to 39.
Yep. And long term, management is talking about 45, maybe even 50%.
Wait, pause there. 50% margins for hardware. That sounds like a software company. Is that really realistic?
It is aggressive, I agree. But it's possible because of that space prime model. When you build the rocket and the satellite parts, you capture the margin at every single step. That's why you see the big banks raising their price targets. We've seen $105, even $120.
Because they see a path where Rocket Lab can grow into this huge valuation.
Yeah, exactly.
So the bull case is, it's pretty compelling. A monopoly in small launch, a booming satellite business, and huge government contracts. But we have to look at the other side. There are some massive risks here.
Well, there certainly are. Let's break that down even further. The biggest one has a name, Neutron. This is their new rocket, the one that's supposed to compete with Falcon 9. The whole growth story hangs on this thing working.
Yeah.
We just got some news a few days ago.
Right.
The tank rupture. January 21st.
Yeah. During a test, the stage 1 tank failed. The stock dropped 4% after hours. Now management said, hey, it's testing, this is normal. But it isn't.
Well, this is the binary risk for the entire company. Look, in rocket development, things break.
Yeah.
That's part of the process.
Yeah.
But the timeline here is razor thin. They're scheduled for a debut launch in the first half of 2026. We are in that window right now.
So if this isn't just a minor defect, if it's a real design flaw...
Exactly. Then it's not a week's delay. It could be months, maybe a year. And if that timeline slips, the entire investment thesis takes a big hit. The market is pricing this as the SpaceX competitor. And to be a competitor, well, you actually have to fly the rocket.
So every day it's delayed is a day SpaceX solidifies its lead.
It's the opportunity cost of time. Investors are paying for a schedule that assumes perfection. If that slips, the valuation starts to look very, very heavy.
And speaking of heavy, let's talk about that valuation. The market cap is floating between $40 and $44 billion.
Which is staggering, really.
For a company that is still, let's be honest, not profitable.
That's the reality check.
Yeah.
You're looking at, 48 to 50 times forward revenue, not earnings, revenue. Net income is still negative, about $190 million. Free cash flow was negative $69 million just in Q3.
Because they're pouring it all into Neutron.
Right, which is the correct strategic move. They have to spend. But for an investor, it means you're paying this huge premium today for profits that might happen in 2027 or 2028. You're pricing in absolute perfection.
And it kind of seems like the people inside the company might know how high that price is. We have to talk about the insider selling.
It's an uncomfortable subject, but yeah, we have to.
Over the last 90 days, insiders have sold over $150 million of stock. The CEO, Peter Beck, sold around $90 million.
The COO, Frank Klein, sold over $7 million as well.
Now, to be fair, these are usually pre-planned sales, right? The 10b5-1 plans.
They are, so you set them up months in advance. It doesn't necessarily mean they think the company is about to crash. It's just diversifying personal wealth.
Okay, I get the diversification argument. I would sell some too, but $90 million, that's a lot of diversification.
It is. And when you see that much selling right at all-time highs, it sends a signal. It suggests the insiders think this is a very good price to, take some chips off the table.
Yeah.
It makes you ask, if the CEO is selling here, should I be buying?
Okay, so sky-high valuation, a key rocket test just failed. Insiders are cashing out. But massive growth in government backing. It's a classic battleground stock. So for everyone listening, what do we watch for in the next, say, 30 days?
We're in a critical window. First up is Q4 earnings coming up in February.
What are you looking for there? Just a revenue beat? The revenue number is important, sure. We want to see that 170 to 180 million range. But honestly, I'm listening for one word. Neutron. The timeline.
The timeline. After that tank rupture, investors need reassurance. If they say, it was minor, we have a spare, we're still on track for H1 2026, the stock will probably be fine. If they get cagey or announce a delay...
Look out below.
Exactly. But the first flight milestone itself, the market is just waiting for that rocket to leave the pad. That's the catalyst. Until it flies, it's a concept. After it flies, it's a product. That single event could re-rate the stock up or down.
And what about that backlog we talked about?
That's the third thing, execution. They said 57% of that $1.1 billion backlog is supposed to convert to revenue within a year. That's aggressive. So we need to see news. Are they shipping the SDA satellites? If that schedule slips, the cash flow story starts to look a lot scarier.
So, putting it all together, Rocket Lab has graduated. They're not a startup anymore. They're a defense prime with $1 billion in cash, But
at 50 times sales, the market has priced in a flawless Neutron launch. It's an execution test. The next 3 months will tell us if they can shrug off that test failure and fly, or if gravity is finally going to catch up to this stock price.
And that is the lowdown on Rocket Lab.
Before we go, I want to leave you with one final thought. We always talk about the commercial side of space, internet, tourism, all that. But think about the geopolitical angle for a second.
Okay.
If low Earth orbit really becomes the next military high ground, the value of a company that can rapidly build and launch satellites in weeks, not years, that value might get disconnected from normal metrics. We might start valuing it less like a tech stock and more like a utility for national survival.
Now that is something to think about. All right, that's it for today. If you got value out of this, please make sure you are subscribed. We'll be back next time to break down another major market move. Thanks for listening.
See you next time.